out there, okay? Those in the back, can you hear me very well?
Yeah.
Can you hear me? Okay, good. If you can't hear me, just tell me to speak up. I'm a little nasally, I just changed the weather here. The first policy that I'm sure everyone has heard of is term insurance. Anyone ever heard of term insurance? Yes. Okay. So let me explain what term insurance is and who it's for. That's very important. Term insurance is typically for younger generation, those that may have small children, and that needs to do college planning. Maybe you have you just bought a home and you have this big mortgage that you got to pay off in the next 30 years. You just got started. Like I said, college planning and stuff like that. That is who term insurance is for the most part. Is there anything wrong with term insurance? No, but you just need to understand how it works and who it's for. Okay? It's typically not for the older generation. Okay? When you're getting over 55 years old and now your children are no longer children but they're adults and they're on their own, you don't need term insurance anymore. Does that make sense? Okay? So something else you need to understand about term insurance. Term insurance is only for a specific amount of time. Okay? Make sure you understand that. It's not for your entire life. It's not to run until you pass away at 80, 85, 90, whatever it is, okay? It's for a specific amount of time and then it runs out, okay? So let me explain what that means. The most common term insurance that's out there is a 15-year term and a 20-year term. There are some companies that will offer a 30-year term, but the most typical ones is 15 and 20-year term. So if you take out a 20-year term right now, when does it run out? In 20 years, okay? When you think of the word term insurance, think of that first word, term. When someone tries to sell you a term insurance or you're looking at a term insurance, application or something, think of the President of the United States. He's not in office forever. He's only in it for a term. He may get reelected for a second term, but he's only in it for a term. He's not in it forever. Does that make sense? Term insurance does not build up cash value inside. It's just strictly pure life insurance, and that's it. Once it runs out, it's gone. You no longer have insurance. Well, here's the problem with that. When you take out a term insurance policy when you're younger, and let's say you run it for 20 years, okay? First of all, understand this. When you take out a term insurance policy, that comes with the medical exams and the physicals. That's when they come out to your house, or they may send you to the doctor to get an EKG, okay, blood work, urine samples, all those type of things has to get done. They pretty much want you as healthy as you was in high school. Is there anybody in here healthy as they was in high school? Okay? There's going to be some ailments going on if you keep living. Okay, it's going to happen. But that's how strict they are for you to qualify for those type of policies. Okay, that's the main thing I want you to understand. Okay? But what happens is once you take out that policy, after the 20 years is up, you no longer have insurance. Well, guess what? 20 years later, you may have diabetes now, you may have high blood pressure now, something else going on. That now when you say, wow, I no longer have insurance, I need to call the company and get insurance. Now they're going through new health questions for you, where you're 20 years older. And now with health issues, now it's going to be really tough for you to qualify for a new policy with another company. Or if they can qualify you, the price is going to be sky high because of the illnesses that you may have. Does that make sense? Okay? So that's how term insurance works, and a lot of times, again, at 69 years old, it drops off, you turn 70, you no longer have insurance, and then their price is going to be sky high for you with most companies, okay? Next type of policy I'm going to talk about is called a universal life. We also call it a UL, universal life policy. Universal life policy, or UL, is one of the most misunderstood policies out there. So let's talk about, first of all, who a UL policy is for. A UL policy is typically for people that are looking to invest money. A UL policy is an investment vehicle attached with a death insurance policy. So, for instance, typically the people that get a UL policy are business owners, entrepreneurs, okay? Because they have a lot of extra money floating in that they can fund those policies because they're trying to invest in the market out there. So if you're a person that may not understand the market, what's going on in the market today, if you're on a fixed income, if you have a set income, those are the type of policies that can get you in trouble. Okay? And let me explain how. Most agents that sell this product do not set it up to be funded properly. For example, what they're trying to do is say, well, I know Miss Betty wants to save money, and she was paying this much for this much coverage. So what I'm going to do is show her this universal life policy and cut the cost in half. She's going to take it, because most people are going to take based on price. But what happens is that policy, because let's say you're only paying $40 a month, that policy is only good to run for about 12 years or so. And what happens is it's building up cash value inside, kind of like the whole life policy. It builds up cash value inside that policy as well, because it's part of that $40 going into the market. Okay, it's being invested. But what happens is, in the course of that 12 years, your cash value is steady building up, getting bigger and bigger. But the cost of insurance has gone up also, because remember, the agent didn't fund it properly. He didn't calculate it properly to last for the duration of your life. He tried to set it up to where you would buy it and cut the cost. So now what happens is you're paying $40 a month, drafted out your bank account, right? Cost of insurance has gone up. 12 years later or so, it could be 10 years, depending on that particular policy and how much you're paying into it. 10 or 12 years later, if you look at your policy, you see the cash value starting to trickle down. How much are you still paying? You're still paying your $40 a month out of your bank account. But inside the policy, what's really going on is the cost of your insurance has gone from $40 to maybe $100 a month. So now what they're doing is they're taking your $40 out of your bank account, like they've been doing, which you're used to, but they're also deducting another $60 out of the cash value, and it's steady depleting. So when we sat down with clients, and they say, well, why did we get a letter? Has anybody ever heard of that? They got a letter saying that insurance has gone up? That's what's happening. So your cash value is steady trickling down, and they're taking from that. Well, now, later, when it gets to zero and it's depleted, that's when you get that nice little love letter that says you need to send in X amount of dollars if you want to keep your policy. And by that time, then maybe additional $150 a month. That's what happens a lot. Has that ever happened to anybody, or have you ever heard of that happening to anybody? No? Okay. So you want to be careful with these policies, because if you don't really know how they work, and again, if you're on a fixed income or something like that, and you're not a business owner, we have a lot of different contracts coming in and business deals or whatever. You want to be very careful on these policies, because they can. I've seen a universal life policy get a lot of people in trouble this way. They spent a lot of money down through the years, built up cash value, and then it went away. And then when they sent that letter saying to keep your policy, it's additional $150 a month you got to send in. And then they're saying, well, I'm on a fixed income now. I can't continue doing that. Okay, and now that policy's gone. All that money you paid into it is gone now. Okay, so we like to make sure when we sit down with our clients to make sure that you don't currently have one of these policies, and that's what's going on inside the policy, because we can make it stop before it goes to that depletion point. Okay, all right, everybody got that? So let's talk about the last policy. The last policy that is out there is called whole life. Everybody heard of whole life before? Yes. Okay, whole life insurance is really typically the best policy to have, whether you are 10 years old, 20 years old, 70 years old. It goes for your entire life until you pass away. What do I have on me? Right now, I have on me, I'm a business owner, but I have on me, I have a term insurance policy, I have a universal life policy, and I also have a whole life policy. Okay? Because if I die, if I don't make it home tonight, I have kids that still need to go to college. So I have to have a large policy to pay out. But the older you get and you've paid off debt, your kids has grown or whatever, you may not need as much coverage. A lot of times as you get older, you may only want enough to cover the burial needs so it's not an embarrassment to the family, and so that they will have something to take care of that burial need immediately. Does that make sense? Right. Funeral funding is what we do. But the whole life policy, the way that policy works is it is calculated and funded accurately so that it never runs out, so that your policy will never increase in premium. Because no one wants their premium to go up, am I right? Especially as you get older and go into a fixed income that you may be on, you definitely don't want anything else increasing, okay, if your pay is not increasing. So the whole life policy is one of the safest ones you can have. Part of the money that you pay is the insurance, and another part goes into that cash value account that's building up with interest in that cash value account. And it's never depleted unless you personally take it out. The company doesn't take it out, like the universal life policy. It's there for you. And what they do is when you get one of those policies, a whole life policy, you have the illustration showing you on this year how it's steady increasing, where year 10 is going to be this much in there based on how much you're paying into your plan. Okay? So whole life policy, depending on the company that you choose to go with, if you don't already have one, some will still make you do a medical exam, a physical. They want to get your firstborn. That's something that Lincoln Heritage does not do. But there are a lot of companies out there that will kind of make you jump through hoops. And the reason why I got with Lincoln Heritage 8 years ago was because this is one of the companies that do not do that. They don't require medical exam, physicals, and stuff like that. So there are companies out there that does not require those things. There's very few, but we're one of the ones that do not require that. Okay. Something else I want to talk to you about, being very, very careful. Please be aware, listen to this carefully. A lot of you in here watch TV just like I do. Okay. There are so many commercials out there floating around every single day and then on the internet as well. Please be aware of the commercials that you're watching. Okay? Let me explain something to you. Has anyone ever heard in some of these commercials where it says about life insurance, it says, no health questions asked? You've heard that before? Okay. I want you to understand something. If they're not going to ask you a health question, they don't know you, first of all. But if they're not going to ask you a health question, understand that is not first day coverage. Which means if you take the policy out, immediately it's going to be a 2 to 3 year waiting period. Oh, wow. Think about it. Now, I'm going to break it down, and it's going to make real sense to you right here. You ready for this? All right. So, for example, when they do these policies over the phone, they don't know nothing about you. Right. They don't know if you're sick right now, just got diagnosed with cancer. Doctor just gave you 30 days to live. They have no idea. So they're going to say, okay, we'll give you $50,000 if you die. We're not even going to ask you one health question. Does that make sense? No. Think about it. So they're going to do that only if you make it 2 years or 3 years. So it's automatic. When they say no health questions asked, that means it's going to be a 2 or 3 year waiting period. It's not first day coverage. Wow. Okay?
So you're saying you be paying for it, it ain't no good.
if you live past that amount of time, then that pay out.
So you take it out a day and it's like, you through. Yeah.
Right. Now, there's other policies out there you got to be careful for. Now, you want to make sure that if you're needing a policy, if you're needing a life insurance policy or whatever, don't do it by phone. Don't do it by the internet. If you can't get a licensed agent to sit down with you in the state of North Carolina to explain how the policy works and show you things, do not purchase that plan. Because too many people are buying policies over the phone and over the internet through a life insurance company, and what you are buying, what they send you, is AD&D. Anybody know what AD&D stand for? Accidental death and dismemberment. So you're thinking, I'm paying $25 a month for a $200,000 policy, I'm good to go. And you get that policy in the mail, you see the name of the company on it, and a lot of people take that and put it right in the file cabinet and won't even open it and read it. And a lot of times we come by and do a free look at it. And a lot of times we're the one that's opening it ourselves. Wow. And I've sat there and I've said, Miss Betty, how long have you had this policy? Oh, I had it about 3 years. I'm like, oh my gosh. And I'm the one opening it? And she didn't know that what she was paying for was AD&D, accidental death and dismemberment. And I had to explain to her and her son, if mom had died within the last 3 years of natural causes, cancer, stroke, heart condition, whatever, family would have got zero. And she's been paying for 3 years on this policy and had no idea. Wow. You need a licensed professional to sit down with you and explain what you're actually getting. And when you get your policy in the mail, look at it. Read it. Okay? Please be careful of those things. All right? All right, now about the busting bubbles here. You ready for this? Anyone ever heard of AARP, Colonial Penn? Yeah. All right. Here we go. Uh-oh. Well, this is fact, okay? We've sat down with many clients many times and talked to them about these policies, and they said, well, I have AARP or I have Colonial Penn. majority, it's not all of theirs policies, but majority, almost 90%, 95% of the policies that they put out there for people goes up in price every 5 years. And they do not tell you. And what it is, we'll sit down with a client and we'll look at their papers, and you have to literally flip on the back side. It's on the back side of one of the pages where people don't pay attention to. And it's a chart, and it shows you took it out at this age, and every 5-year age band, your price is going up. And it shows where you're paying $75 a month right now, 5 years from there, it's going to go up to $175 or whatever it is. But it's clear as day on there. And we've had people, nope, not my policy, my AARP policy ain't like that, it ain't went nowhere. Well, how long have you had it? 3 years? Okay, in 2 more years it's going up. Go get it, let's look at it, and they like, oh my gosh, they had no idea. So again, please be aware of these policies, these companies that you see on TV, buying them over the phone. Get a licensed professional to sit down in front of you. Take the time to do it. Okay, take the time to do it, because so many people are going to be affected by it. Your direct family is going to be affected by it if you buy the wrong policy. Your church family is going to be affected by it, and that should not happen. Okay? So, the last thing I'm going to talk to you about is something that's very, very important. Let me pose a question for you. How many of you here right now have heard of a family that split up, argued or something after a loved one passed away? That's happened? Why did that happen? Huh? What? All right, so Pastor said they wasn't organized. Well, let me explain something to you. Listen carefully. If you do not put it in writing, your final wishes, how you want things carried out your way in terms of the church, who's in charge, clothing, where to be buried at, cremation or not. If you don't put it in writing, your final wishes, you're going to allow the 3 C's to happen to your family. The 3 C's is chaos, confusion, and conflict. Happens every single day. And the 4 is cussing. The 4 C's. Add that to the program.
That from the pastor.
But the thing is, those are the things that happens, and so many times that a loved one passed away because things weren't organized. Let me give you an example. I'm serious, and some of you are probably thinking of situations that's happened where loved one passed away down here, down south, but now the sisters and the brothers that live up north is calling the ones down south saying, hey, don't plan anything for mom's funeral until we get down there. Don't do this, don't do that. Well, why y'all pick this funeral home? Why y'all pick that? Why y'all do this? Does that make sense? Y'all heard that before? That kind of stuff got to stop. Okay? Because that's just splitting families up. So, better yet, what you want to do is make sure you have it in writing. And that's one of the things that our company does, Lincoln Harris Funeral Advantage, is we make sure that everyone organizes their final wishes. They put everything in writing, who's in charge, and what's going to happen in their own words. Songs to sing, everything you can think of. It's the same thing as if it's going to happen the next day. You're putting it in order your way. And then you have to keep peace within the family. And that's what we got to start focusing on. Making sure that when it's your time to go, that your children are not fussing and fighting over where to lay mom to rest. Does that make sense? Okay? So the other thing about Funeral Advantage with Lincoln, what we do is when it goes time to go to the funeral home, you're not by yourself. There's a lot to be done within a quick period of time when someone passes away. One of the things that our company does is when you put everything in writing, what you want done, from what funeral home to use and things like that, our company is the only company out there that will do this. They will actually personally pick up the phone, talk to the beneficiary, and coach the beneficiary on what to say and what not to say when they enter the funeral home. Has anyone in here ever planned a funeral before? Okay, so all of you been in that position before, right? One of the first questions they ask you when you walk in the funeral home is what? Do they have a policy? And how much? Because when you tell them, oh, well, mom had $20,000, cha-ching, that casket just went from $2,000 to $6,000 because you can afford it. And that's why our company coaches you on what to say and what not to say when you go in there so that they're not being overpriced. And if it is overpricing going on, our company gets on the phone and will call the funeral home to negotiate the funeral costs down. What company you know does that? There's only one, Lincoln Heritage. That's it. That's why we're representing Lincoln Heritage, because no other company's ever done that in the 20 years I've been in this business. And when I saw that happen to some of my clients, when they were like, wow, it was so easy. The funeral was costing $12,000, and now I don't know what Lincoln Heritage said, but we're getting the same casket, the same amount of cars, the family cars, and everything, and now everything is $7,200. What did they do? They did exactly what I told you when I was at the kitchen table. We do deliver. So please please understand, you need to put things in writing. We make sure that everything's organized. We have it on the computer at the home office in Phoenix, Arizona, to make sure that those things are done, so it's getting carried out that way. Okay? Are there any questions? I know you probably have some questions or whatever. I do have a sheet here that I'm going to have Rodney pass around, that if any of you are interested in sitting down with him later to take a look at your current policy that you may have, to make sure you don't have one of those policies that's going to be running out for whatever. Make sure you don't have a term insurance or whatnot. Please fill out this right here, just some basic information that we need, and then he'll give you a call to schedule something. Are there any questions? Yes, sir.
How do you determine how much you need? I know everybody's lifestyle is different, but how do you determine how much insurance you need?
Okay, basically, you want to look at, first of all, how much money you may want to leave behind. It depends on what your goals is. And that's what we do when we sit down with you, is find out what is your goal. Some people's goal is, hey, I just want enough to cover the burial. I don't want to leave, my children having to worry about the funeral costs or whatever. Then some people say, hey, I want to leave, I have 3 children, and I want to leave each child $10,000 a piece, or whatever it is. You know what I mean? So that's one of the first parts that we start on, is finding out what is the actual goal. Are you looking to leave money behind, just cover the burial? Because, I mean, that's the fact. Some people say, well, my kids are grown and gone and whatever. I ain't trying to leave nobody rich or whatever. I just want enough to cover the burial.
Can I say something? And listen, y'all, seriously. That's probably one of the biggest problems of us. We don't leave nobody nothing because we don't trust anything. We got to be real careful when we, even with policies and stuff like that, that you leave your children something. And I'm not talking about if they just grow, especially the younger ones or whatever like that. But we're so selfish. We're so, I don't know, we're selfish. We got to be mindful of the generations after us also. Everybody else is leaving their children this and this and this. We're just so selfish. Well, as long as I get in the ground, I don't even care about nobody else. And that's our mentality. I've seen it. I've seen it over and over. We got to be mindful. You got to leave a legacy with somebody. Trust somebody. Your bills still got to be paid. And then you dying, and then you leaving everybody out there to dry, struggling, and they sitting up there trying to pay your bills that you made in life, and now your children can't even get ahead because they paying your bills.
That's true. Message.
Message.
Any other questions? Yes, ma'am.
So, like, I'm assuming that your policy doesn't have to be, it's not one that has to go to the funeral home. My grandmother had a policy, the funeral home had to get the policy. And they had to call up the people that the policy was for and let them know that they had the body. Whereas my mother, all I did was call them, they said, give us the number to the funeral home and we'll send you the check. But this check went to the funeral home. No. And so, and it had to go to the funeral home. I mean, there was no option.
What may have happened was the funeral home may have taken an assignment of the policy. And you do not have to do that. No, you can have it where the money goes direct to you. I know at Lincoln, we'll give the client, the beneficiary, the choice of either having the check overnighted or direct deposit right in their account.
24 hours.
And we're one of the companies that we specialize in paying claims. Okay, we're the only company having it in writing how fast we pay out a claim. You will not find a company out there that will. You call any company on this earth and ask them in the claims department how fast you pay out a claim. Well, it just depends. They'll give you a runaround. When you call Lincoln Heritage, the answer is 24 hours. Oh, another thing. Let me say this too while you're filling those out. not knocking any funeral home whatsoever, because there's some great funeral homes around in this area and all over North Carolina. Not knocking any funeral homes at all. However, please do not go to a funeral home and pay them anything for a funeral planning process or whatever. Let me explain what can happen. When you go directly to a funeral home and say, well, let me go ahead and pick out caskets and different things or whatever, and they say, okay, well, everything you want is going to be $12,000, okay? And here's your payment plan. Well, first of all, it's going to be higher than what you can get a regular policy for the same $12,000. That's number one, okay? Second of all, it's not insurance. What that means is, let's say that you pick out a plan, through the funeral home and it's $12,000, you have to pay that $12,000 off. So if you write a check today for the $150 to get it started, and they're going to draft each month, 3 months down the road, you've already paid $150 a month, right? If you die, guess what happens? Say it again. That's still a balance there. Somebody got to pay it. But if you took out an insurance policy and sent that check in and died, the whole $12,000 been paid out. Now, another nightmare. This has happened. I'm not going to say what funeral home it was in Burlington. But I had a client in Greensboro that named this funeral home and said, well, my final wish is this is funeral home I want to do the service and everything. Okay. Well, down the road, about a year later, that funeral home went under a lot of scrutiny. They did some things. They left a body. They left a body in the hearse outside in the summertime. So I was getting calls from different clients saying, I don't want to use that funeral home no more. So you have that right. When you have an insurance policy, you have the right to choose and change any funeral home you choose to. But if you was paying payments to that funeral home for the last 4 or 5 years, they just got your money. If you say, I don't want to use y'all no more, I'm going over here. They're not going to give you nothing to take with you. Does that make sense? They're not going to deduct thousands of dollars that you paid them and say, here you go ahead and go wherever you want to go. You lost out on that money. And you're starting all over again. Yes, ma'am.
What about pre-planning and just giving, showing them your policy?
Nothing wrong with that. Nothing wrong with that. And we advise that because, like I said, with our policy, we help you with the funeral planning forms. They have everything in writing. You have copies of those things. And we advise to sit down with the funeral director or the pastor and say, hey, this is what I got going on. So if something happened to me, and if my daughter or son ain't acting right, you have information of what I want done. Yeah, nothing wrong with that at all.
Okay, now, I'm not talking about
Y'all must be some kids.
Okay, if we've shown the funeral director the policy, and when the death occurs, and you take the policy there, perchance, can someone in the family cash in on that policy? And you have already have it in your records that you're going to use this policy? Does that make sense? You all know what I'm saying? Well,
yes, and the answer is yes. But that's why you need to designate who you want the money to go to that you trust. You don't want to. That's who your beneficiary is. Honestly, here you have a couple of options. The first option is this: when you're choosing a beneficiary, you don't want to choose a beneficiary based on emotions. Okay? You want to choose a beneficiary based on trust. Based on, if I die, I know this person is going to take this money and take care of the burial needs like they're supposed to, like my wishes says. Okay? So whether it be, I got 3 sons, if all 3 of them sons, if I feel like they're going to cash this check and buy cars with it, I need to find somebody else to put as beneficiary.
Now, what if a parent has given this person power of attorney? A parent and the siblings. So you have no choice there. I mean, your hands are tied.
Pretty much. I mean, if they're listed as a beneficiary of that policy, the money's going to go to them. Now, if you took out a policy on yourself. Your other option is, like I said, either make sure you designate the right beneficiary who you really trust, that you know that they're going to do the right thing. The other way is doing what this young lady was talking about before, is you can take it to that funeral home and say, have them take assignment of the policy, or put them down as a beneficiary, so that the money will go to the funeral home to take care of the payment. So if you don't have nobody you can trust, personally or whatever, you can always choose the actual funeral home itself. You also put them down to make sure, hey, I got to make sure this is taken care of. And that's basically how we explain to clients. Don't have a rift between you and the children or whatever, and why do you make me the beneficiary? No, I had it all taken care of. The funeral planning, everything is done. My funeral will be paid off. You don't have to worry about nothing at all. The money's going to go straight to take care of the burial needs. You don't have to worry about anything. That's what they need to hear. Not, you're not the beneficiary. Don't say it that way. Yes,
I have two questions. First one is, I know my dad had one of his policies was a guarantee policy. It wasn't a big, it was small. So what category would that fall up under?
it was a guaranteed. It just said guaranteed on it.
No, I had something else. Anyways, it's for older people, but he.
Oh, it might be like a guaranteed issue policy. Well, a lot of times, if there's they used to call guaranteed issue policies if they have a certain illness, if they have illness like cancer, stroke, or something like that recently, or something like that, they're guaranteed to have a policy. Those are the ones that may be like a 2-year wait period or something. You're guaranteed to have that policy if you outlive those 2 years.
Well, yeah, 'cause that did, well, he passed just before his 2 years, it's almost, I think on that.
So they pay back the premium into it.
Yeah, what was paid in,
Yeah.
yeah.
Yeah. And unfortunately, if you wait too long, if you're healthy right now, now's the time to get that plan. If you're not healthy, now's the time to get a plan. Okay? If you're breathing, now's the time to get that plan. But here's the thing though, if you're healthy, don't wait till something happens. Don't wait till you get to the doctor and say, we found something. Oh man, we'll call these insurance companies. Don't do that. Okay? But what happens is, once it hits the medical records that there is a serious illness, right? It depends on the company. Companies like Lincoln Heritage, they're very lenient when it comes to underwriting. So if a person had cancer before, there's companies out there that goes back 5 years. They'll say you got to be 5 years cancer free. Some will say 10 years. Some questions will say, have you ever had cancer? Well, Lincoln Heritage is only go back 2 years on the exact day. So if you say, well, I had cancer, but my last treatment for cancer was April 2014. That's outside of 2 years with us, because this is October 4th. Does that make sense? So you can get first day coverage with us. So the type of policy you're talking about is sometimes people don't have a choice. If they already living with cancer, well, yeah, that person was just diagnosed with cancer 6 months ago, and they're going through treatment now. That's not a company out there that's going to give them first day coverage. It's going to be some type of waiting period. Most companies are going to say, oh, we can't touch you at all. But there are companies out there like Lincoln, for instance, that will say, okay, despite the fact that you do have cancer right now, or despite the fact that you just had a stroke last week or 2 months ago, we'll still write you a policy. You see my point? So that might be one of the plans that he had.
Okay, and my second question with that, he didn't have a beneficiary on that policy, but they did, but it was left, it was split between me and my sister.
Okay.
But now if a person chose not to have a beneficiary, how do y'all handle that?
Typically, we try to go to the next of kin. They can prove that they are next of kin, but a lot of times it can go to the state and be held up in probate for years. Yeah. So it's very important that you, and that's why one of the things that we do is it's very important that you look at your policy on a regular basis, at least like once every year or once every 2 years, just to pull it out and make sure that everything's intact, because beneficiaries do die.
Yeah.
And people forget to change it out sometimes, and 10 years later, oh my gosh, he's been passed, and so you want to make sure that you have things updated.
What about if the beneficiary died before the person that they got insurance on died, and you're the only beneficiary?
Well, we stress that you need to have a contingent. A contingent means that you have the primary beneficiary, which is the person that's going to receive the money, and then next you have the contingent, meaning that if the primary dies before the insured, the contingent becomes the primary.
Oh,
Yeah. So you need 2 people that you really trust. And it needs to, listen carefully, it needs to be someone that's over 18 years old. You don't want, everybody want to name their children who's 7 or 8 years old, no. That's going to set probate. It won't be issued out to that child until they are actually 18 years old. Okay? Wow. Any other questions?
So you guys do ask health questions, right?
Yes.
Okay, so what's the two health questions you ask? Is it height and weight?
No? We don't have a height weight requirement?
That's the one I get every time.
No,
height and
I
weight.
know. I've been out there. I've been with a lot
And
of.
they deny me every time.
I've been out there I've been with a lot of different companies, and they ask some questions. I just upped my life insurance up with another company. I just took out another one, like the big policy, and so he was asking me questions over the phone. I was like, oh my God, I don't miss that at all. When I was representing other companies, all the questions that they asked, they was like, is your parents still alive? How old is your mom? How old is your dad? I'm like, what? You know, so. But no, with us, we ask about I think about nine health questions.
Heart condition, liver.
Yeah, it's more of serious questions like you have cancer right now in the last 2 years and this, that, that. Even if you had those things, we still got a policy for you. But when it comes to like height, weight, and
That's it. That's
driving license issues, DUIs, DWIs, you had any DUIs?
Yeah.
it.
It's very-
That's
it's-
height and weight.
No, it's very late. I wrote someone day before yesterday had high blood pressure, diabetes, and gout. Had all that, and I got them first day coverage. And so, and they was ecstatic because high blood pressure and diabetes is, yeah, exactly. That's the powerhouse right there, and we can first day coverage.
But we don't even use a height weight, what they call a height weight bill chart, saying, okay, how tall are you? This is what you should be. If you're not in a guideline, we don't have that. We don't ask. Yeah. Oh, definitely. I'll be like your birthday. Any other questions?
You
Yep.
mentioned that with the commercials and stuff, that they say they're not going to ask any health questions. You need to be aware of that. Is there anything that you need to be aware of, or anything that you really need to check out with the whole life insurance?
Not really. I mean, whole life is you know, you want to make sure that you want to make sure that it is definitely a whole life policy, because there's some policies they'll send you that's not really whole life, and it will be like it's going to run out at a certain age. So you want to say like, is it definitely whole life, and it will go to last until I pass away. Because there are some companies out there and they have a whole life policy that they have some type of something, you know, some moving parts in there that you asked about. But that's the reason why you want to sit down with someone that's licensed professional and not over the phone. You know what I mean? It's like, I'm out here sitting down with, and that's the thing. Too many people don't want to be bothered. And that's the craziest thing I've heard in my life. Well, I don't want nobody coming out here, just send me something in the mail. Oh my God, like there's so much at stake here. Sit down with someone for 1 hour out of your entire life and get it in order.
So just make sure that there is no age limit and there's no.
And the thing is, a lot of companies, they stop at 79 years old, so once you turn 80, they won't write you. So I know we go up to 85. So if someone is 85 years old right now, turning 86 tomorrow, we can still write you. Where other companies, if you're 80 years old, some companies won't write you that one. But we will. Any other questions? Yes, ma'am.
I have life insurance at work.
Okay.
Okay, does that fall into any of those types of policies?
Yes.
Good question.
What you have, yeah, it is a good question. What I recommend anybody that has a job that has life insurance, do two things. Number one, get as much as you can on that job, because you can't get anything cheaper than that. Okay, because they're matching or paying the rest or whatever, so max it out. Okay, that's number one. Second of all, you need to have something outside your job too. Even if it's a little small $10,000 policy, something, because if you leave that job and go to another job or something like that, you can't take that policy with you.
My husband had one on his job, then I had one on mine.
Yeah, have something outside the job on both of you, so that, you know, if his job runs out, he gets terminated, laid off, or something like that. And a lot of people be like, well, when I retire, I think I can take mine with me. Okay, well, there's a lot of moving parts in that. You got to get with your HR department and say, if I retire in 5 years, do I get to keep my policy? they'll look it up and you'll be amazed. Some people, oh, I have 150,000 on me at work, but when you retire, it drops down to like 10,000. Okay, so you always want to have something outside. Definitely. And I've had people call me and say, you know what, you was at my house 6 years ago, and you're right. Well, we should have got that policy. Now, when my husband retired, you know, he got a letter that he no longer have the insurance at all. We thought we could keep it. Oh, with that.
And if you do try to keep it, it's going to be $200. It's going to be something.
Yeah.
Because I was with a company for 12 years, and you know, it's term insurance. It's term insurance, but it's so cheap because it's, you know, thousands of employees coming together, so they can offer really cheap. You go out on your own, you get laid off or leave on your own, you can keep it, but it's going to be $300 a month just to keep it. And yeah, so like you said, you want to have just a small pot, something to cover your burial, and so when you leave there, it's never going anywhere.
Yes, ma'am.
Ask a question. I know years ago you could get insurance on anybody without anybody being in the office or anything. Is that true today? Like if I want to get insurance on, say like my dad or my mom or something out there being there, can I do that now? You can't do that now, can you? I know years ago you could do it.
What you trying to do?
Years ago you could actually do that. You could
Long time ago.
Todd.
Yeah, that law has changed now. Law has changed because people have done that and killed somebody off. But
Yeah, no.
what happens?
Don't tell them that.
If you have power of attorney over someone,
But that's only effective until they alive, though, right? Power of attorney don't affect when they alive or dead.
No, if you already have a power of attorney over them now, while they're living, then then you can go ahead and take out a policy on them, and they don't have to sign for anything or
What I'm
whatever.
saying is the power of attorney is only effective while they're living.
Right, right. But now, you can take out a policy on mom, dad, or whatever. They have to know, in North Carolina now, they have to know about it. You can be the owner of the policy and the beneficiary of the policy, but they just have to sign that they know about it. And it's just, the way I explain it is, look, hey, mom, dad, if something happens to you, I'm responsible for making sure that you're buried and taken care of, and sister such and such and brother such and such, he ain't gonna do it. So I'm gonna pay for it. You ain't gotta worry about the premium. I got it. I'm paying for it. Right there, normally they go, okay, if you're paying for it, I don't care. And they say, okay, and then we set it up and for the appointment, and they just sign off that they know that they're the applicant of the policy. You're the owner of it. You control it. They can't call and cancel the policy. They can't pull any money out of the policy. They can't do nothing because you actually own it. Okay. All right. Well, again, thank you for coming out tonight. I hope I didn't bore you. Appreciate Pastor for letting me come out, letting us come down here and everything. So if you want to just pass those up, or Bradley's going to collect them from you.